Hey everyone, today let's discuss the secret to a topic that is dear and near to many of you, and that is purchasing your first property. But what if you have little to no money saved up? Don't worry. It's still possible to make your homeownership dream a reality, even with all the news around home prices rising, then falling, then spiking again. Let's dive into how to do it and how you can turn home ownership into a reality. Stay until the end for a bonus and little-known way to get the house you want without even having to ask for a loan. Yes, that's right. Now, let's dive into it. Across the country, you can qualify and use a multitude of programs. Amongst them is the FHA loan, which is a program designed specifically for first-time homebuyers to get a loan for as little as a 3.5% down payment. Regardless of your income, and requiring a credit score above the 580 mark, which can be achieved without troubles. If you choose to go the FHA route, keep in mind the following, since you can only do this once and only the first time you are buying a house via FHA. A more practical way to get your mortgage paid for itself, yes, you heard me right, is to buy a multifamily property rather than a single house. See, most of the people are thinking on a single-family detached house to fulfill their dreams and those of their family. But if you can find a duplex, triplex, or up to a fourplex, you can still buy them through the FHA program at 3%, then you would live in one of the multi-units and rent the rest to other people. This would instantly turn you into not only a homeowner but a landlord, with the convenience of having multiple units paying for your mortgage, and, if you run the numbers correctly, you can end up living rent-free. This is a topic for another video. And depending on where you are located, there are many initiatives and programs your state may have to help you even more in qualifying and reducing your initial investment. After all, your main goal remains to purchase a property with zero to almost no money down. Along with FHA, there are other conventional loans that compete and even sometimes beat FHA. Another option is to consider a cosigner. If you have a family member or friend who trusts you and is willing to cosign a loan, this may help you get approved for a mortgage with a lower down payment. Just keep in mind, the cosigner is equally responsible for the loan, and if you default, their credit will be impacted as well. If you have a friend or family member who is also looking to buy a property, you consider purchasing a multi-bedroom house together and living with roommates to split expenses. This can help make your monthly mortgage payment more manageable and can turn into a business opportunity long term, increasing the number of properties in your portfolio. Not bad, huh? Now let's talk about both Fannie Mae and Freddie Mac, and before you think these are names of music groups, let me tell you what they actually are. Fannie Mae offers the HomeReady program, which basically allows you to use someone else's money as a gift, thus qualifying as a down payment. And the best part is that you can still get a property from as little as 3%. This is ideal if you have a spouse, family member, or relative that is willing to help you and invest, without you having to come with this lump sum, and because it's a gift, it requires absolutely no money from buyers who have access to a personal gift or qualified down payment grant. The gift or grant can cover the entire down payment and all closing costs. And what's even better, this gift does not have any tax penalties. The caveat of this program is that there are income restrictions, so if you have a high income, this next program might be best for you. And that is the Fannie Mae Conventional 97. With this program, you can also buy a house for as little as 3% down and don't go through the, sometimes, longest qualification process of the HomeReady program. But it won't allow you to take on any gifts, and you would have to technically provide that 3% for the down payment directly. As mentioned before, there are also the Freddie Mac Programs, which offer alternatives for new home buyers, repeat buyers, as well as low to moderate income and higher income brackets, all this under their three initiatives, Home Possible, HFA Advantage, and Home One. All the links are in the description. USDA loans are another special type of mortgages offered by the government to help you buy homes in rural or suburban areas at the benefit of no down payment, low interest rates, and more relaxed credit and income requirements compared to other types of mortgages. Although to be eligible, you must meet certain income and location requirements, and the property you want to buy must be in a designated rural or suburban area. Many times, the lenders are the ones who have the final decision over what program they offer you, based on your income, credit score, and payment capacity. Alternatively, you can always consider the traditional way of coming up with 20% for your down payment, as this will clear out some headaches such as the mortgage insurance and other restrictions that can add up significant costs to your monthly payment and reduce how much of your payment actually goes toward the balance you owe. Another common option is to consider lease-to-own programs. This option allows you to rent the property for a set period of time while working towards the option to buy. This can be a great way to build up your credit and save for a down payment, while also getting a feel for the property and the neighborhood. Do note that typically, this can be one of the most expensive ways to acquire a property, and it may be subject to many conditions imposed by the current owner or leasing company. Now, for the bonus. What if there was a way for you to actually buy a property with little or no money down, without having to ask your parents, friends, or a co-signer for money, without government assistance or even qualifying for a loan? Rest assured, seller's finance is a legit way to buying a property, and you can use it as many times as you want to get your hands in properties, no matter the size and the price. But how to exactly do this? You need to speak directly with the sellers, and that means more than one or two. You actually need to get out there and invest time door knocking, or working with a realtor, or wholesalers, and reach out individually to these owners that are either behind on their payments or not willing to continue on their investment, and rather than giving it away to the banks and fall under foreclosure, they are open to finance it to you. Many times, you can even get on these types of deals with zero to little money down, on your own terms and without having your credit checked. Bonus tip: always make a contract for any kind of transaction to protect yourself. In conclusion, with this method, you can get your hands onto multiple real estate units without having to qualify for loans, meet income criteria, and have your credit checked by multiple lenders. Ultimately, it is your decision. Whether if you decide to take on any of these alternatives or save your way to a 20% payment, keep in mind the famous real estate motto that says, "Don't wait to buy real estate, instead, buy real estate and wait." Hope this video has helped you. And as a token of appreciation for watching until the end, here's a picture of a hedgehog.